For parents and anyone out there who still doesn't quite understand, what exactly are kids doing on Roblox?
Kids on Roblox aren't just playing, they're learning, they're hanging out together. When they can't be together in real life, they're hanging out on Roblox. They could be playing hide and go seek, they could be pretending they're running a store or a pizza parlor, they could be making the next big game or adventure. So it's really a wide range of things, and it involves doing things together, pretending you're together.
Everybody is talking about the metaverse as something that's going to happen in the future, but there's an argument to be made that Roblox has already built a metaverse. What do you think?
I think we've started. There's still so much innovation to be done, and there's so much invention to be done in this category that it's mind-boggling.
Part of what I love about business is you get to build things from nothing.
I don't have any investors. All this is all money in. This is me just building it, building it, building it.
There we go, 11:29 in the morning there at the Imperial Palace. So we're seeing stocks under pressure right around the region, if not globally. There we go. We have a Nikkei 225 going off to its lunch break with a 0.9% fallback. Topics also, of course, as you'd imagine, going to the downside too. Against the backdrop, as we've been saying, of, again, currency moves. Quite violent, really, in some ways. Somewhat rapid, as the CEO Suzuki was saying earlier on. We've got at the moment also, of course, out there, we've got the whole concerns about the Federal Reserve also playing out once again. Hang Seng 1.3% down. Kospi also looking at levels for the won. And certainly as we go for lunch, probably welcome relief, David.
Yeah, time for a break. Been a manic morning. It arguably started out with a bond sale overnight in the U.S. bond market, and then you had that push up in the 30-year yield, 3.5%, the dollar story. In fact, where we are right now, and this just might be a short-term thing, right? So in terms of just momentum, we might have actually risen a little bit too quickly. Short-term, medium-term, and still dollar strength. We're going to get it up on your screens for you. 14-day RSI. The Taiwan dollar, that's, well, dollar Taiwan dollar is closing in on 90. So, I mean, virtually there or close to there, overextended, and maybe too much momentum behind the dollar trade against this. But this is extremely short-term, medium-term with the Fed-ish. It's looking like we're still going to be pushing higher on this one.
Right, well, let's bring in David Finnerty here, Bloomberg's FX and rate strategist. David, it seems like there's nothing stopping the greenback now.
Yes, and really there's no reason to stop the greenback. If you look at US yields, they're pushing higher. You have a bunch of Fed speakers, including Lowell Brainerd and Powell, coming up this week, and they're more like going to keep this hawkish stance going, saying they're going to raise rates further. They're going to wait for CPI data next week, so they mostly won't comment on whether to do 50 or 75. What will be interesting to see is if they comment on rates next year. Do they see the terminal rate going above 4%? If they start indicating that, then the market's obviously looking for a rate cut next year. So the market has to revise its expectations. So the chances that the dollar pushes even higher. And when you combine that with equities pushing lower, which is also dollars positive, it's tough to see the dollar not rallying at the moment in the near term.
David, where are we on just various, I guess, modes of intervention narratives here, whether that's the yen, the yuan, or anything else really that's catching your eye at this point in time? And do we actually get direct intervention, or is that still too far away?
I think the key thing on intervention, obviously everyone's looking for Japan, does it intervene? The other thing you have to remember, it's the yen's weakening, but then everything is weakening against the dollar. And if it's one-sided intervention, it tends to have limited effect. Yes, you'll get the short-term move of a yen strengthening if it was Japan intervening. But for it to be long-term, you need coordinated intervention. And if you go back to what Janet Yellen said back in July when she was in Japan, she said it takes rare and exceptional circumstances to really warrant intervention. So from the US perspective, they're saying, hey, this is market driven. We see no reason to intervene whatsoever. And if they're not going to intervene, then it's stuff, any other intervention will really be just a short-term effect before the long-term trend resumes, which again, if the US yields push higher, it means just dollar strength will resume quite quickly.
David, also, you're in the crosshairs too, and people say, calm down, nothing to see here, don't worry about what's going on. You surely start worrying just because people are saying that.
Yeah, no, exactly. Well, everyone's looking for 7 because it's a nice psychological level. I mean, I think the key thing, which the PBO said, is they're more concerned about the speed of depreciation rather than the level. I mean, it's not like the market's going to hit 6.99 and hit 7 and suddenly the economy will collapse. So, you know, but it's just a nice round number that markets look at. I think a more interesting number is something around 7.20 because that's really going back to a low, back down to 2019. But it's really what the PBOC is trying to do is just try and say, let's try and slow down its depreciation. But again, as we can see, it can only do so much if US yields continue to jump higher as they did yesterday. So really, everyone's at the mercy of US yields at the moment.
Including the equity markets. David Finnerty, our FX and rate strategist. In fact, just on that note here, Asia-Pacific equity markets are at 2-year lows. We've even pushing even further after we broke this week the July low on price. That's MSCI Asia-Pacific, including Japan. That's what you see on your screens right now, 2-year lows on that. We took out the July trough. Now, as far as what this means for valuations and multiples, take a look at this. We're now trading below 12 times forward earnings. This one, though, takes Japan out of the equation, which is, I guess, something that more people follow. And, yeah, is this cheap enough? It's certainly getting cheaper and cheaper here, Rish.
Well, Ishika Mukherjee is the one who may well know the answers. Asia stocks reported that. Ishika, gives a sense of whether or not we're going to hell in a handbasket.
Hey, it's really not looking good today. If you look at the MSCI Asia Pacific Index, like you pointed out, it's trading now at a May 2020 low. You're seeing export-heavy economies and markets such as South Korea and Taiwan leading losses in the region. That's just adding to all the negative sentiment that there is around the semiconductor cycle, with investors expecting consumption to reduce, demand to reduce for chips. And the won is the weakest in the region among local currencies. That's not helping at all. And you're seeing foreign funds continuing to sell today.
Yeah, so Ishika, what are you guys going to be writing about today? I'm not privy, of course, to the conversations within your team, but you're at your desk, and I'm sure some people are in and around you. So what are the angles today to watch?
I mean, what's interesting is that while North Asia is doing badly, again, you're seeing parts of Southeast Asia that are holding up well, right? You have Indonesia, which is little changed, and you have China, actually, surprisingly, which is little changed. You're seeing that correlation continuing to break off from the other markets in the region. Indonesia actually is eyeing a fresh record high. So it was close to that yesterday and missed it narrowly. So you're seeing the whole divide between Southeast Asia and India versus markets like Korea, Taiwan, and China is, you know, on its own. There are other drivers for that market. So we're just seeing that continuing to play out now.
Ishika, you know, David just brought up that chart of where we are in terms of valuations. I mean, at what point are they a screaming? I mean, they may be already a screaming buy, but a really, really very, very loud screaming buy.
I mean, so we have been asking investors this question, but you want to make sure you don't fall into the valuation trap, right? Because the MSCI Asia Pacific Index is down about 30% from a February 2021 high. And there aren't any reasons right now for it to rebound sustainably, that is. You could see short-term ones. So investors are asking, is it really worth it getting into this space right now, given all the risks surrounding global equities and China's ongoing zero-COVID strategy?
Yeah, in fact, Ishika, I think Goldman Sachs, Tim Mo, if you're listening, this one's on you. They do see deeper earnings cuts for Asia in the coming months. Ishika Mukherjee there, Asia stocks reported, I guess, to that question, is this cheap enough? If we get revisions, maybe not. Right, let's get it over now to New York. Vonnie Quinn's there. She has your first word news. Vonnie.
David, thank you. Japanese prosecutors have arrested 3 Kadokawa executives as they investigate alleged bribery in the Olympic sponsorship process. A fresh warrant was also issued for former Tokyo 2020 board member Haruyuki Takahashi. It's alleged that Kadokawa paid Takahashi around $489,000 in bribes between 2019 and 2021. In a statement, the company says it will fully cooperate with authorities. California is telling residents to prepare for imminent rolling blackouts, issuing its highest level emergency warning as electricity use reaches a record 51 gigawatts. Power demand is soaring with temperatures above 40 degrees Celsius across much of the state and schools and businesses reopening after Labor Day. The emergency declaration allows officials to order some large power consumers to shut down. Pakistan is facing more flooding after its largest lake reached a retaining wall. Water from Lake Manchar inundated hundreds of villages downstream after it burst its banks and could force thousands more people from their homes. Pakistan's planning minister says damage from the floods will be far greater than the $10 billion initially forecast. More than 1,300 people so far have been killed. Bank of America says it's planning updated return to office policies that formalize some of the flexibility the bank has given workers during the pandemic. CEO Brian Moynihan told an industry conference the plans will be based on feedback the company got from staff surveys. Moynihan says the policy will add formality to the flexibility and will be specific to each business unit. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Vonnie Quinn. This is Bloomberg. Rish.
All right, let's see what we have coming up. We've got Saha Youssef of UC Berkeley discussing the science of video fatigue and how to combat digital exhaustion. That's as we're live at the JP Morgan APAC CFO and Treasurers Forum in Singapore. This is Bloomberg.
At Bloomberg, we believe in the power of ideas. That's why we launched Bloomberg New Economy Catalyst. It's a community of global leaders and innovators who are blazing new trails to transform business and government. This platform will help them share their ideas with the world and provide access to the resources they need to bring them to life. Bold thinking, breakthrough action, Bloomberg New Economy Catalyst.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Right, we've got more and more people here selling off stocks at least. Got a Hang Seng 1.2% to the downside, and certainly CSI bucking that trend. We've got trade numbers out of China in a short while. We've got also a lot of people returning to the office post-COVID. Boosting one's productivity and getting more done can sometimes be a challenge. Let's get you back to the JP Morgan APAC and CFO and Treasurers Forum.
Yep, Haslinda Ahmed, our co-anchor, is there with us, standing by with an expert who teaches busy leaders and their teams how to be more productive and effective at work. Not that we do that just yet, but yeah, what are the tips, Has?
Dave, not to get too excited, we're not going to the world of Marvel. We are still talking about becoming superhuman, sustaining peak performance. Look at insights from Sahar Youssef from the University of California, Berkeley Haas School of Business. Good to have you with us.
Good to have you. Good to be here.
Talk to us about becoming superhuman. I mean, the gist of it is about, having peak performance at a sustainable basis. Is that even achievable?
Absolutely, it's achievable. So here's an interesting, I would say, something we can play around with. Imagine rewinding time 100, 200 years ago. How often were we talking about issues around burnout? Imagine sitting down with your great-grandparents and explaining to them that I feel busy every single day. I'm only getting 4 or 5 hours of sleep, and I feel busy every single day, and I can't even feel like I can hear my own thoughts. And I'm doing so much, but the important work still isn't getting done. It gets pushed to tomorrow. And then tomorrow happens, and I'm busy all day, and it gets pushed to the next day. This is when I sit down with folks, CEOs, CFOs, folks in the C-suite, this is exactly what I'm hearing executives complain about, is that I wake up in the morning, and it's go, 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 nonstop all day, and then literally, like, work just keeps getting pushed. Progress, meaningful productivity and progress just isn't happening.
So what do you do? Is it about putting 100%, not getting distracted by anything else?
There are some, I would say, best practices. Some of those are going to be around focus and distraction management, as you are beautifully sort of describing here. And that, really the science behind that is all about monotasking, making sure that we are intentional about what it is that you actually want to focus in on. So actually being intentional and saying, I want to get X done, and if you want to get X done, then the goal needs to be for you to manage everything else out, put everything else away. You don't have email open, your phone out, and Apple Watch. You're not trying to do 15 other things, because when you do that, an interesting actually model for this is to talk about cognitive capacity. Our cognitive capacity is limited and it is finite, like so many other precious resources, right? If we want to talk about resources even like money, for example, time, energy, and focus. All of these things are limited, finite resources, which means when you wake up in the morning, you have a limited amount of energy and focus to deploy for all of the things that are most important to you.
But we take pride in being multitaskers. That is a myth? Is that what you're saying?
Yes. We're not multitasking machines. We do not, in fact. So let me put it this way. Sure, you can multitask. Although I put it in air quotes because the term multitasking is not biologically speaking and neurologically speaking valid. What we can do is rapidly task switch or context switch. But what we're doing is we're taking that 100% capacity and you divvy it up. Imagine if you had a $1 million budget for something, right? You don't have $5 million budgets. I said one. You get one $1 million budget. That's your budget. If you want to take half of it, you go $500,000 here, $500,000 here. Great. You have your email open, or you have Slack open, or whatever, Microsoft Chat open. You have chat open, and you have the thing that you're focusing on. You're reading something. Okay, 50-50. Maybe it's 80-20 if you know how to drive a car. So you're driving, right? You're driving a car and you're listening to something. You're on the phone. You're talking. What happens when you miss your exit, actually? Let me ask you that question. What happens if you're listening to a podcast and you miss your exit, or you're on the phone talking to somebody and you miss your exit? What would you naturally do?
Turn back.
Turn back? Yeah, but typically what you do is you turn it off. And what your brain knows that it needs 100%. So let's say, for example, before you did 40-60. 40% on the driving because you know where you're going. You're going home, let's say. You know where you're going. 60% is on the conversation or on the podcast or whatever you're listening to. If you miss the exit, you go, dang it. Shh. I need 100. Hold on. Where am I going? Where's the next exit? What should I do? So it's about taking that 100% if you want to be smart about it, and if you want to get your work done as efficiently as possible with reducing the number of errors. And I know in your line of work, like, we don't have space to make mistakes. You need to be paying attention. So you need as close to 100 as you can possibly get.
You talk about digital hygiene at a time when all of us are glued to our devices, multiple devices. I mean, what should you be doing with your devices?
I'm going to use the word intentional again, because that's truly, I think, the hallmark of all of this. I'm not demonizing. I come from Silicon Valley, by the way. We're the originator of so many of our digital devices and our digital products that we use. It's amazing. It has completely changed the game for how organizations and companies can collaborate and communicate at scale, internationally around the world, right? We've gone global because of our technology. I'm not saying it's bad. I am suggesting that our biology is not modern tech. It's ancient tech. It's a very old technology, and we're using and interfacing with very modern tools, but we're doing it in a way as if we're pretending as if it's completely integrated into how our brains and our bodies work. And changing our mindset and our perspective to say, I'm not saying technology is bad. I have all the gadgets. I love them all, right? My lab uses all the gadgets. Modern technology is wonderful and beautiful. But if we can be more intentional about it, and what I mean by that is when you are using it, use it. When you're not using it, don't use it. You should use your technology, not the other way around. So I want humans to be in the control seat where you are situated and you're saying, I want to check the news. Go intentionally check it and focus. Now I want to go make a phone call. Go intentionally do that. Right? So it's about just intentionality as opposed to what do I see especially younger people doing in their career. Everything is on and interrupting you. I'm sitting down to focus on something, zzz, bzz, ding, pop, boop, and then your attention is just completely scattered. So the risk of mistake goes up tremendously. Also, it's just going to take us 2 to 3 times longer to get the same work done. And then we wonder why everyone's burning out.
We're talking about becoming superhumans. How many hours of sleep do these superhumans need?
So a healthy average adult needs 7 to 9 hours of sleep every single night. High quality sleep, 7 to 9 hours every night in order to maintain longevity. We're talking about longevity for the brain as well, by the way. So we're talking about how to just maintain daily cognitive performance. So if you look at, by the way, a lot of the studies on sleep, especially that have come out in the last 30 years or so, we've learned a great deal about the science of sleep and the importance of it. If you do not get enough sleep, there seems to be both short-term consequences in addition to long-term consequences. The short-term consequences are on cognitive performance decrements. So our cognitive performance, your attention span, memory, your ability to manage multiple things and put something down, pick something back up again, all of these things are diminished and negatively impacted when we get less than 7. Then you look at long-term consequences and we're looking at risk for Alzheimer's disease, cognitive decline, dementia, skyrocket if you consistently get low quality sleep and not enough of it.
Okay, just one final question before I let you go. If I do one thing, just one thing, to be a superhuman, what would that be? Top of the list.
The digital hygiene that we talked about. Change your relationship with the notifications. Turn 95% of them off. Only emergencies come in. If it's the kids' school, whatever it is, you define your emergency, your boss's boss. You've got your list of VIPs, VIP numbers, all of it, contacts. Put that in the VIP camp, even in your inbox. Everything is not an urgent emergency. And what that will do is it will create more quiet in your life, and then you'll say, I can think clearly and I can strategize. I can finally focus and see life and my business for what it really is.
Great clarity now. Thank you very much, Sahar. Sahar Yusuf from the University of California, Berkeley Haas School of Business. Plenty more ahead. Keep it here with us. This is Bloomberg.
At Bloomberg, we believe in the power of ideas. That's why we launched Bloomberg New Economy Catalyst. It's a community of global leaders and innovators who are blazing new trails to transform business and government. This platform will help them share their ideas with the world and provide access to the resources they need to bring them to life. Bold thinking, breakthrough action, Bloomberg New Economy Catalyst.
A lot's happening on Wall Street.
I think Jay Powell said things that were indefensible.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insight.
We think that's the next secular shift.
From businesses most influential and instrumental.
Yes, it's about renewables.
It's a challenging dynamic.
This is a level of uncertainty that we haven't had to deal with.
Bloomberg Wall Street Week, live Friday with replays all weekend on Bloomberg Television and Radio. From the world of politics to the world of business. Balance of Power with David Weston. News, analysis, insight from and about politics power players. Weekdays. This is Bloomberg.
Strategy in China has actually not changed for us, and it was
The current strategy was born from decisions that were made actually a few years back. The idea was that we would like to have an important presence on shore because it's the second largest economy in the world, and for us, a bank that has a global footprint in over 100 markets, it makes sense to have a large presence in the second largest economy in the world.
JP Morgan Asia Pacific CEO Filippo Gori was speaking, about 40 minutes ago, thereabouts. Yeah, there we go. And our coverage continues at that JP Morgan APAC CFO and Treasurers Forum coming up. We're going to be talking exclusively to the global head of corporate banking, Sjoerd Lienert, joining us there as well. Right, let's move on, have a look at some of those business flash headlines. We've got Evergrande Group said to be exiting its investment in Shanghai Bank. It's under a forced auction on an Alibaba website. Sources saying that a state-owned entity is the only bidder ahead of the Wednesday deadline, offering $1.1 billion for the near 15% stake. We're told that Evergrande will use the proceeds to repay debt owed to Shenzhen Bank, meaning that the sale won't help bondholders or home buyers of stalled projects. Abu Dhabi's Mubadala Investments said to be nearing a deal to buy Fortress Investments from SoftBank Group. Sources saying that the purchase could value the U.S. asset manager at more than $2 billion. Rajiv Misra, key lieutenant to SoftBank founder Masayoshi Son, playing a key role in brokeraging the deal.
Okay, let's have a look at these, the currency markets one by one, and some of the individual ones we're really focusing on right now. So Chinese currency, this is the onshore rate, that's a 20-year look, and certainly the adjustments along the way. And as you can see, we're pushing on that 7 handle, and Securities Times talking about how investors should not overly emphasize the 7 level, which might mean we could get there and we shouldn't make a big deal out of it. Philippine peso, there we go. Let's go back, please, to the graphic before we get to this. All-time lows as far as this is concerned. This is the first time we've had a 57 handle on the Philippine currency. 1400 on dollar Korea. We're getting close to that. First time since 2008, 2009. And dollar yen, Chief Cabinet Secretary talking about the need to maybe do something if these moves continue. We're now at a 143, 144 handle on dollar yen here, Rish.
Quite something. Yep. Oil prices also at levels haven't seen since January as well. So there we go. Loads more to come. You're with Bloomberg.
ผลลัพธ์เหลือเชื่อมากไม่คิดว่าจุดด่างดำบนใบหน้าจะจางลงได้ค่ะ
L'Oréal Paris Glycolic Bright Serum.
We believe in the power of ideas. That's why we launched Bloomberg New Economy Catalyst. This platform will help them share their ideas to reshape our world. Bold thinking, breakthrough action. Bloomberg New Economy Catalyst.
What do Formula One cars and your local supermarket have in common? Well, strange as it sounds, they might both be using the same technology. A lot of innovation has trickled down from the world of high-tech engines, and it hasn't just found a new life in road cars. F1 cars have long been thought of as the peak of cool, and technology in them is also helping to cool down our produce aisles. Engineers from Williams are using their knowledge from 9 Constructors' Championships, working with company Aerofoil to help reduce the energy consumption of supermarkets. The device they're building is based on the design of an F1 car's rear wing. It attaches to fridges to keep more cool air in the unit. They estimate it can reduce supermarket energy consumption by 25%. One innovation from F1 is also helping hybrids reduce their carbon footprint. That's KERS, or the Kinetic Energy Recovery System. In common parlance, it's known as regenerative braking and works by storing energy of the car decelerating in a battery for later use. If that's not enough, F1 is now looking at TERS, or a thermal energy recovery system, looking to harness the heat produced from braking and the engine exhaust. That could allow cars to generate the same power using 30% less fuel. So while F1 may have a reputation as a gas guzzler, some of its innovations in the name of speed are helping in the everyday fight against climate change.
The difference between missed opportunity and actionable intelligence. For in-house attorneys who strive to provide superior counsel and strategic advice, Bloomberg Law offers an unmatched platform of analytics tools and business intelligence. All to help improve productivity, mitigate risk, and inform decision-making. For the comprehensive platform that helps you work smarter and faster, the difference is Bloomberg Law.
Strong enough to stay. We will never break as the water rises and the mountains shake. Our love will remain. We will never, no, never. We will never, no.
About the future of the entertainment business. Where do you think it's going? Do you think there's going to be movie theaters forever?
Anybody that says to you, and I won't name names, that says the movie business is over, are fools.
However you get your news.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia.
This is Bloomberg Technology.
This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg. From the heart of where innovation, money, and power collide, in Silicon Valley and beyond, this is Bloomberg Technology with Emily Chang.
This is Bloomberg Technology. Coming up in the next hour, Juul ordered to pay almost $440 million to settle a probe over the e-cigarette maker's marketing to teens. But the company still faces hundreds of lawsuits. Plus, the rise of the creator economy. We're going to take a deep dive into this booming industry and how YouTube in particular reigns supreme as platform of choice. But TikTok is catching up. And it's back. The NFL season starts this Thursday, which means more sports betting on sites like DraftKings. Our conversation with CEO Jason Robbins on what to expect as we kick off this week's Sports Tech series. All of that in a moment, but first let's get a look at the markets and the tech sector leading the declines as markets continue to fear a more hawkish Fed. Bloomberg's Ed Ludlow is back in San Francisco with the latest. Ed, welcome back.
Yeah, I've sat out a few painful weeks in the markets, but stocks in the red, tech underperforming, really becoming a familiar story. US services data on Wednesday, stronger than expected, reinforcing the idea that the economy can withstand higher rates, that the Fed will remain hawkish. That says that the NASDAQ 100 down 0.7%, underperformance in semiconductors, and a sell-off in the bond market. See the US 10-year yield up 16 basis points to 3.34%, its highest level since mid-June. And that follows 3 straight weeks of declines declines on the NASDAQ 100. There's this feeling that we'll continue to see declines, especially when you take into account earnings revisions. If you come with me into my Bloomberg terminal, simply put, for 13 straight weeks, we've seen downgrades to earnings estimates outnumbering upgrades, and that is a worrying signal as we enter a period of the year that actually isn't traditionally very strong for equities. And as always, Em, there are some stories out there in the news cycle, some names we're keeping an eye on. And a day where there are only 29 names in the green on the NASDAQ 100, Tesla, the biggest points performer to the upside, the Apple 24 hours ahead of a key event where we hope to get new details on the latest generation of iPhones, the biggest points laggard on the NASDAQ 100. And then two key names I've been watching, Ubisoft, US-listed shares of the French video game maker actually surging as much as 17%, pairing that gain to 4% on news that Chinese giant Tencent will double its stake in that company. And Altria ultimately closing down 1%. It spiked higher on headlines crossing the Bloomberg terminal that Juul, in which it has a 35% stake, which is worth a lot less now than it originally was, has reached that settlement with 33 different states, which I know you're going to cover later on the show, Em.
Absolutely. Ed Ludlow, thank you. We'll talk to you later. Meantime, Juul Labs, as Ed said, agreed to pay $438.5 million to 33 states. This resolves a 2-year bipartisan probe into the e-cigarette maker's manufacturing and sales practices, the states claiming that it marketed addictive nicotine products to children. Bloomberg's Eric Larson joining us now to discuss. So, Eric, tell us how significant this settlement is today.
It's a very significant settlement. It's certainly the largest that Juul has had to pay to date involving any individual states. You know, in the last year or so, the company had settled a few state lawsuits by Washington State and North Carolina and really had all this huge investigation hanging over it in the meantime. So clearly they decided to be done with this particular risk, although clearly there's a lot of lawsuits still pending out there. But this definitely does away with a lot of the lawsuits that could have been filed by these 33 states and Puerto Rico.
So, how much does this resolve these, hundreds of other lawsuits, essentially? How much of Juul's legal troubles go away as a result of this?
Well, it definitely is significant that these states have settled, but there are still over 2,500 civil lawsuits, like personal injury lawsuits, that have been filed by individuals, and also dozens of cases filed by state governments and school districts. In fact, in November, the San Francisco School District will go to trial in the first of these cases to go to trial, which could really show the potential for how a jury might react to the evidence once it is presented. So that's another one that potentially we could see a settlement before it hits trial, but there are over 2,500 suits out there, plus several states that are, including New York and California, by the way, which normally are, have the potential for big settlements or damages. They have lawsuits pending against Juul that are still pending.
So Juul's agreed to stop a number of different marketing practices as a result of this settlement. What are they, and how big of a change will that be from the company we knew before?
Well, we should note that Juul said in a statement today that all of these things that it has agreed to not do, it is already not doing, is the way it put it. It said it voluntarily changed its business practices a while ago, as the writing was on the board here about how it was, the hammer was coming down on some of these marketing practices, but it's no longer going to market to youth. It's not going to do most social media marketing, not going to use cartoons and ads. It's agreed to not do public transportation advertising. It won't be using anyone who's under the age of 35 in any advertising. A lot of things like that. No sponsored products, no free products. Quite a wide range of activities normally associated with the marketing that it's agreeing to not do, including, importantly, only limiting to FDA-approved flavors, which it used to, of course, have lots of different candy flavors, fruit flavors, and now they've done away with that.
All right, Bloomberg's Eric Larson, thank you for that update. We'll continue to watch how those civil suits evolve. Meantime, coming up, an update on private markets and VC. We will be speaking with Sheila Patel, Vice Chair and General Partner at B Capital. This is Bloomberg.
Get the power of app analytics and engagement in one single platform.
We believe in the power of ideas. That's why we launched Bloomberg New Economy Catalyst. This platform will help them share their ideas to reshape our world. Bold thinking, breakthrough action. Bloomberg New Economy Catalyst.
Solar energy, wind power, battery-operated cars. The transition from old to new energy forms has investors placing bets on which technologies will come out on top. Bruce Flatt's Brookfield Asset Management sees what it calls massive opportunities. Its new impact fund raised more than $15 billion, and Flatt says it could have raised more. The fund has two targets: companies that need to dramatically curb greenhouse gas emissions, like power providers, and those that are in a position to dominate in clean energy. Brookfield hired former Bank of England Governor Mark Carney to strengthen its environmental, social, and governance investing. In March, Australian utility AGL Energy shot down Brookfield's takeover offer. The firm had aimed to accelerate AGL's transition to net zero emissions by over a decade. Carney signaled that this was no problem. He says Brookfield is reviewing at least 50 potential transactions across a range of industries.
Let's take a pulse of the VC market and declining market conditions as fears continue about a hawkish Fed, and talk about what is the future of venture capital after the growth at all costs mantra of the last couple of years. I want to get to Sheila Patel, get her insight on this. She's the vice chair and general partner at B Capital Group. Sheila, thank you so much for joining us. So curious, just what is your reaction of to a continuing hawkish Fed? Obviously, we're getting mixed economic data. Some that looks better than others. But what does this mean for your world and your investing strategy?
Look, I think venture capital has been in an amazing run for the last decade, and it was inevitable that we'd come to a more difficult time. That said, looking at the environment we're in today, looking at everything you mentioned, the Fed, the geopolitical environment, I actually think it's a great time, just as it's been in the past when you've gone through vintages or cycles that are difficult in private equity, in other segments of the market, to really look at VC today and the technological innovations that are driving future innovation and really future productivity. So to my mind, the pullback is actually necessary and a good thing for shaking out where we need to be in VC.
So where are we in VC? Talk to us about trends you're seeing in the private markets. Are valuations still too high? Are there more valuations that are going to come down?
Look, I think as you're seeing in the latest rounds, you're seeing founders realizing they need to do larger deals, more capital at reasonable valuations. People need cash runway. That's to be expected. It's also reasonable to expect we'll start to see an increasing amount of M&A. And I think many of the reports we're seeing, whether from Citigroup or works that our friends over at BCG, with whom we have a strategic partnership, have done, suggests that you'll see more M&A, particularly in the software space, and particularly in the areas like the back office. So I do think there's room for some valuations to move, but I also think there's room for some incredible innovation to come, even in areas that have seemed the most difficult. I think crypto is a great example of that, where there is an interesting future ahead after this latest downturn.
The question is just how long is this downturn going to last? I mean, we've had guests on the show who are predicting millions of layoffs in tech, and that this is going to last 2 to 3 years. Does that jive with your thinking?
Look, I think that's entirely possible. I'm probably a bit more optimistic than that, mainly because I see some positive trends in what's going on as well. For example, a recent survey done by Citi suggested that CFOs and CHROs, so in the financial space and the HR space within corporates, aren't pulling back on areas like software spending. A lot of what we focus on at B Capital are core areas like enterprise. And these are areas where companies can find efficiencies at the same time they're going through more difficult economic circumstances. So in many cases, for certain segments within technology, recessionary environment, or at least even a difficult environment, is not necessarily the worst environment for the business.
Meantime, you're investing in companies that are, taking on big tech or trying to challenge big tech, do things better than big tech companies do. We've been following this big piece of legislation that's been working its way through Congress to rein in big tech, but there's a chance it won't make it before the midterms. What do you think the impact of this legislation could be, and what's the impact if it doesn't happen before November 8th?
Look, I think around the world, the technology industry has proven itself to be incredibly adaptable. And this is not the first time or the first region or country to take on issues within big tech. We've actually seen it where I lived for many years in Europe. And you've seen the tech industry continue to adapt. And I think many within the tech industry are eager to adapt, right? Technology sometimes moves faster than human capacity to handle it. So to my mind, whether the regulation happens before or after the midterms, some amount of regulation to big tech is coming. And I think everyone's accepted that. Everybody's ready for that. The real issue is making sure that it's addressing the right things and really solving the right problems that people have concerns with.
So what's your advice to your portfolio companies right now? Potentially we're in a prolonged economic downturn. There's a lot of uncertainty ahead. We're moving out of an era where there was, lots of money flooding in, but now, investors want to see real numbers.
Yeah, look, I think it's a real chance to go back to their knitting. And I think this is where you really see, particularly as we look at portfolio companies, the best in the management side come to the fore. Founders that think about things for the long term, founders that have a sense of their use of cash, their burn rates, and really maintaining their runway, but also have a sense of the competition and realize if they're in a moment right now where some of the competitors are facing more difficult times, they need to be aggressive. They need to think about ways to push themselves, their business, their products forward as solutions in a difficult environment. And I think you see many of the best founders and innovators able to put that hat on that says, my idea is the best idea. I've put it together. This is when my competition is showing the signs of weakness or the challenges of the way they've managed their business. And so this is when it's my time to shine.
So where are you placing your bets in terms of where you think we're going to be this time next year?
I think this time next year, hopefully, we look at it as a more stable time. I think what we've said repeatedly from our perspective is we invest over many quarters. We don't raise a fund and think, let's all get it put to work right away. So I think you'll still see us slow and steady investing in a year from now. I think we'll be very focused, again, on the areas where we see opportunity. So enterprise, thinking about the evolution of crypto. My colleagues, Matt Levinson and Ryan Savell, just wrote a great piece about where does crypto go from here and where crypto and fintech merge. And to this moment, most of what's gone on in crypto has really been driven in many cases by speculators. But where do the real world applications come in as you think about emerging markets, as you think about removing middlemen, which you've already seen blockchain do in a place as unlikely as India? In getting money to rural areas and so on. So I think we really still are thinking about where do the ideas of today that may not have been applied well get applied in real world situations tomorrow. I'd say climate tech is another key area for us that we see will be important over the next several years.
All right, Sheila Patel, B Capital Group Vice Chair and General Partner. Thank you, Sheila, for sharing your thoughts with us. Meantime, Theranos founder Elizabeth Holmes claims a key witness in her criminal case visited her after the verdict and expressed remorse about his testimony. Holmes alleges that a former Theranos lab director showed up at her home and said his testimony had been twisted by prosecutors. She's now asking for a new trial after these allegations. This just weeks before Holmes is scheduled to be sentenced. Coming up, the creator economy is booming. How this new industry is changing the face of entertainment and continuing to grow. We'll talk about that next. This is Bloomberg.
VK ฟิล์มรถยนต์กันร้อนดีราคาถูกรถยนต์เริ่มต้น 3,000 บาท
Most of us don't spend much time thinking about the grid, the dizzyingly huge system of cables, transformers and outlets that reliably powers our lives. It's an easily ignored, change-resistant part of the modern world, and that's the way we like it. But as we move towards less planet-melting ways of producing electricity, the grid is going to have to evolve too.
We're seeing so many countries and governments announcing high targets when it comes to decarbonization and being climate neutral. But this is just one side of the coin. It's not enough to simply generate green energy. We also need to make sure that this is transmitted and distributed to the end consumers.
The grid of today just isn't equipped for renewables. So a new kind of grid is starting to take shape. The supergrid.
Taking a deep dive now on the creator economy, which has experienced a massive boom over the last several years, along with a slew of platforms like Spotify, Instagram, and TikTok, and the ruler of them all, of course, YouTube. To give you an idea, every minute, at least 500 hours of footage are uploaded to YouTube. Let's break this all down with Roberto Blake, a content creator who also has his own coaching program that helps influencers build their online brands, and our very own Mark Bergen, who is out with a new book today called Like, Comment, Subscribe, Inside YouTube's Chaotic Rise to World Domination. You can buy it now. Mark and Roberto, thank you so much for joining us. Mark, I want to start with you. Can you just start by giving us a sense of how big the creator economy is today and just how much it has grown on all of these different platforms over the last several years?
Yeah, there are estimates out there that it's about 100 billion, which is from 0 to 60 within maybe the past 15 years, really. And certainly in the past 5 years, I think that's just exploded as all these platforms have got involved. You know, that mind-boggling stat about 50 hours uploaded. The other major stat is that there are now over 2 million creators in YouTube's partner program, which is actually a smaller number than it was before. If people in the audience remember that YouTube actually cut that number, and it's been around 2018. But it's been gradually moving it up, and particularly as they're facing new competition from TikTok.
Roberto, you were a graphic designer and a freelancer before becoming a YouTube content creator. Why did you make this big job change? And give us a sense of a day in your life.
Well, I mean, that's a great question, Emily. For me, a lot of it comes down to the things that are obvious for people is you want more time freedom. You want to be able to talk about and do things you're very passionate about. You want to feel a sense of ownership over the things you're doing. So when you work in, for other people, whether it's as a freelancer or if you work at an ad agency, something I used to do, it's great. It's very gratifying. It's very fulfilling. And it's very legitimate in the eyes of your relatives. But when you get to do something of your own and have complete ownership of it, get to build it with your own two hands, you feel directly supported by a community of like-minded people, there's nothing like it, nothing in the world like it. And so I think that's what attracts a lot of people to the creator economy and opportunities like YouTube, podcasting, and live streaming.
Why do you focus on YouTube in particular and not TikTok or Instagram?
Well, I've been with YouTube almost since the very beginning, and YouTube is still the most powerful search engine in the world across all ages and all demographics. And YouTube has a sense of permanence with its content. YouTube's also the best monetization opportunity for content creators. It has over 8 in-platform monetization streams. I teach content creators roughly 15 different ways they can monetize, primarily using YouTube specifically. But I also do understand and value other platforms. I have a presence in other platforms as well. But I feel that even with the rapid rise of TikTok, I feel that there is nothing like the permanence and longevity that YouTube content creation has. And if you talk to TikTokers on a regular basis, which I generally do, you'll find that a lot of them have the intention of pivoting and moving to YouTube at some point in their career, because they do want a sense of stability and permanence, and they also want the potential for evergreen content to benefit them and be monetizable in the future. They know right now with the TikTok Creator Fund that while they're getting something in exchange for their content, they know they're disproportionately underpaid for the attention when compared to traditional content on YouTube, as well as in the live streaming community. And within YouTube, live streaming, and podcasting, there are higher opportunities in terms of direct compensation when it comes to sponsored content and brand deals, and it's not even close. So for me, that's probably one of the bigger deals.
Not even close is one way to put it, Mark. You know, we've talked so much about the threat of TikTok to YouTube, but to Roberto's point, it is a lot of disconnected content and it is less permanent. How big a threat is TikTok really, in your view, to YouTube, and how is YouTube addressing this threat internally?
Yeah, I think it's a viable threat, and certainly more so than Instagram and Facebook have tried multiple times to really build out a creator economy, and thus far have failed. What TikTok and ByteDance needs to do is to demonstrate, Google has a remarkable system, as Roberto pointed out, both for search and for monetization. It's the world's biggest digital advertising company, and it's had this machinery in place for years. TikTok clearly has a lot of political problems, and they haven't really got proven yet that they can be a threat to YouTube at large scale. So YouTube's response so far is Shorts. This is their feature that's sort of short video. They're pushing a lot of viewers there, encouraging creators to go there. They're about to flip the switch on monetization. It's unclear how productive that will be for the company and how they're going to sort out monetization. But if history shows us anything, that YouTube has a pretty strong track record of sorting this out, and I think responding to the threat of TikTok in a really significant way.
Roberto, you're the founder of Awesome Creator Academy, which is a coaching program that helps influencers build their brands online. We had some fun watching your videos earlier today. What trends are you seeing, and what are you telling creators today? Advice that might not be obvious.
I think the thing that is not obvious to most content creators is their potential, their overall potential when it comes to their earnings, and the fact that there is a compounding effect from their content over a period of time. So what a lot of creators don't do is they rely so much on platform monetization, whether it's TikTok and their creator fund or YouTube and their AdSense partner program and things like that, that they don't explore other monetization opportunities, and they don't think of what they're doing as what I refer to as content as a service. So that's one thing that's not obvious to them, is that it's very much almost like software as a service, which most of us are familiar with. We have these wonderful subscription programs everywhere now that we're all paying for. Well, content creators have an opportunity to use content as a service as leverage, not just with ad revenue, creator funds, and sponsored content brand deals, but they can build their own communities around things like their 100 or 1,000 truest fans, and they could have monthly membership programs of their own, whether on platform or off platform. They need to look at things that give them recurring revenue outside of the platform. I'm telling more creators to look into opportunities to build their own products, build their own merchandise. YouTube recently partnered with Shopify, and they also expanded their creator monetization program with regard to merch and even physical and digital products. Used to have a 10,000
We're going to have to leave it there, Roberto. It's so fascinating. We're going to have to log on to YouTube and watch your videos to find out the rest, but appreciate you joining us. And of course, please buy Mark's book. We'll be right back. This is Bloomberg.
Apollo targets investments across sectors and geographies to create jobs and support local communities, partnering with companies large and small to fund their growth and enable transformation. Apollo.
ฟ้าสมาร์ทบอร์ด SCG เหนียวจริงยิงไม่แตกแบรนด์อันดับหนึ่งของไทย
At Bloomberg, we believe in the power of ideas. That's why we launched Bloomberg New Economy Catalyst. It's a community of global leaders and innovators who are blazing new trails to transform business and government. This platform will help them share their ideas with the world and provide access to the resources they need to bring them to life. Bold thinking, breakthrough action. Bloomberg New Economy Catalyst.
For parents and anyone out there who still doesn't quite understand, what exactly are kids doing on Roblox?
Kids on Roblox aren't just playing, they're learning, they're hanging out together. When they can't be together in real life, they're hanging out on Roblox. They could be playing hide and go seek, they could be pretending they're running a store or a pizza parlor, they could be making the next big game or adventure. So it's really a wide range of things, and it involves doing things together, pretending you're together.
Everybody is talking about the metaverse as something that's going to happen in the future, but there's an argument to be made that Roblox has already built a metaverse. What do you think?
I think we've started. There's still so much innovation to be done, and there's so much invention to be done in this category that it's mind-boggling.
No one covers the world like Bloomberg.
We have to get interest rates higher and bring inflation back to our target.
33 million people have been affected by this flooding in the monsoon.
Disruption is the whole point of a strike.
With unmatched reach and resources from more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, your global business authority.
Part of what I love about business is you get to build things from nothing.
I don't have any investors. All this is all money in. This is me just building it.
Welcome back to Bloomberg Technology. I'm Emily Chang in Palo Alto. I want to get back to a check on the markets and shares of so-called meme stocks on the move. Bloomberg's Ed Ludlow back with an update. Ed.
Yeah, and one name in particular, which is Bed Bath and Beyond. That stock falling for a fifth straight day, its worst run since July. It follows news over the weekend that the company's CFO, Gustavo Arnau, died on Friday after falling from a skyscraper in Manhattan. The company saying that they have appointed an interim CFO. You see that decline more than 18%. Reminder that this is a stock that in the month of August surged by 99.0%, caught up in the meme stock frenzy where retail investors discuss this, other stocks on forums online such as Reddit. That decline being felt in the market. You see other so-called meme stocks like GameStop down 8%, AMC Entertainment also down. But the activity around this area has really dropped off. If we use call volumes as a proxy, we've seen the fewest call trades in this space, particularly for names like GameStop, since 2020, nowhere near the frenzy that we saw in early 2021. I want to look at the space as a whole, and the Roundhill meme ETF, which does not include Bed Bath & Beyond, but you can see, like the broader equities market, it's faced 3 straight weeks of declines. The concern around the Fed and higher rates also impacting so-called meme stocks. But it was interesting to see some reporting on the Bloomberg terminal while I was away about this idea that when we got a return to school, also meaning a return to college, that we might see the frenzy in meme stocks pick back up, because a lot of the traders that are doing this are young, they're discussing this online in their spare time. That hasn't really been the case. We've seen that sort of negative sentiment around meme stocks continue, with Bed Bath & Beyond being the exception in the month of August. But tragic news, of course, relating to that company, and our thoughts, of course, go to Arnaud's family.
Such tragic news, Ed. Thank you for that update. I want to move on to the IPO market now, on pace for one of its worst years in decades after an incredible amount of deal activity, of course, last year in 2021, leaving many companies with few options as they wait for the market to calm down. Joining us now, Equities and founder and chief strategy officer, Phil Hazlitt. So, Phil, I believe last time you were on the show, you said the IPO window is totally sealed shut and not opening for a very long time. Do you still believe that?
Yeah, well, it must have been a heck of a party at the Playa at Burning Man, because it's been incredibly quiet this morning and today with news. You know, we normally see kind of a stampeding of IPO news and big funding rounds on the day after Labor Day, companies really eager to get out there and announce something big, and we've seen barely anything. So I'm a bit surprised that, you know, kind of post-summer that there's still been a lull of activity. In fact, we're kind of starting to see that maybe some deals are getting done, but a little bit more discreetly, maybe with a bit more structure. And so I think that, you know, the thesis remains the same, that actually the IPO window is still pretty quiet.
And yet we're hearing that Instacart, for example, is still considering going public this year. Why would a company do this now when conditions are so unfavorable?
Sure. I think there's a subset of the private unicorn companies that have such a large brand and such large cachet that really the only way to continue elevating awareness and creating a currency to buy smaller companies is really to go public. Instacart, I guess, could continue to raise money in the private markets, but if they really want to have extra prominence, they are going to tap the public markets. And they've also kind of created a clean path to do so by kind of already knocking down their valuation publicly, having a very senior executive team, including the CEO. And so I kind of think of it similar to how maybe a company like Alibaba or Facebook, maybe even in tougher environments, still elected to go public.
So how long do you think the IPO window is going to be frozen shut, double locked, as you say? You know, what is the time frame that companies should be planning for?
Yeah, I keep pushing it out more and more. I kind of think of what's happening now as really what happened during the start of COVID, but it's just being stretched over a longer period of time. If you recall, kind of April, May, and June of 2020, IPOs were pretty much at zero. And what we're seeing is almost just kind of a stretching out of that. And what you now see is basically a game of chicken between investors and allocators and IPOs and companies that are ready to go public. If you're a company that is profitable and good stewards of your capital, you can wait as long as you need to. But if you're a company that elected to grow at all costs and burn cash, you're going to have to come to markets at some point. What I actually think may evolve a bit more is that we'll see some more M&A activity, both for strategic investors and also from private equity investors that see some opportunities where deals can get done with a bit more structure, a little less public scrutiny. So I think we expect that to pick up quite considerably in absence of an IPO market that's active.
I wonder how many more valuation cut downs we'll see, though. I can imagine that you've got a lot of VCs out there sitting on portfolio companies that have valuations that are just not right for the times.
Absolutely. What I think will start happening is more and more deals that are actually happening kind of behind the scenes are deals with structure. And what I mean by that is that investors are getting much more preferential terms for the money that they're putting into companies. I think we just saw recently that Joker is planning to raise money at a just slight valuation bump up from their last round, but it also basically gives a guaranteed 40% return to the new investors. More and more of those deals are happening. And here at EquityZen, we're also hearing of those deals happening as well. And so I think those will continue. But to your point, there's a lot of investors that do want to see some exit and some realization of the investments they made. It's becoming very hard for venture capital firms to raise their next fund when they can't actually return capital to their limited partners. And that's, creating some very tense board meetings, which again is something we've talked about and kind of harped on, but I think the fact remains true.
What's happening inside these tense board meetings? I mean, a lot of these VCs have also raised huge funds and they don't have anywhere to spend their money.
Yeah, absolutely. It's I think the best thing you can do is that the show must go on as far as companies operating and executing and selling and kind of realizing their vision. It may just not kind of proliferate and show up in news articles and updates, right? People are still buying enterprise SaaS software. They're still buying cybersecurity solutions. It's just that we're getting fewer and fewer data points on what those companies are really worth. I think at some point we'll start to see some companies that will, quietly exit and sell themselves to big tech, which, by the way, big tech has been incredibly quiet on the M&A front. I think that'll change soon. And so, it's just going to be, I think, a quieter kind of media period for these companies, even though, as I said, these businesses keep operating and keep selling.
All right, Phil Hazlitt, EquityZen founder, chief strategy officer. Great to have you back, Phil, as always. Okay, coming up, it has been 180 days since President Biden signed that executive order on digital assets. What does the rest of the government think about it? Kristen Smith of the Blockchain Association joins us next. This is Bloomberg.
We believe in the power of ideas. That's why we launched Bloomberg New Economy Catalyst. This platform will help them share their ideas to reshape our world. Bold thinking, breakthrough action. Bloomberg New Economy Catalyst.
คนละครึ่งมาแล้วที่ฟู้ดแพนด้าส่งฟรีพร้อมรับเงินคืนสูงสุด800 บาทใครใช้คนละครึ่งสั่งฟู้ดแพนด้าเลย
You will shed light on dark matter. You will make aging optional. You will turn 5G up to 11. Because when you subscribe to Bloomberg, you won't just get news. You'll get insight into limitless possibilities, knowledge, and inspiration to feed your ambition. So before you invent, pioneer, disrupt, before you change the world, Bloomberg.
Strong enough to stay. We will never break as the water rises and the mountains shake. Our love will remain. We will never, no, we will never, no.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
A slew of reports are due this week to the White House stemming from President Joe Biden's executive order on digital assets, including one on the future of money payment systems and the implications of a U.S. central bank digital currency, though these reports likely won't be released to the public till mid-September. Let's talk about what we can expect with Kristen Smith, Executive Director of the Blockchain Association, along with our crypto contributor, Shanali Basic. Thank you both, ladies, for joining us. So, Kristen, what do you think we're going to find in these reports?
Well, I think it's really interesting. I mean, this is the first time that the federal government has looked at crypto regulation from a comprehensive perspective. You know, as you recall, President Biden issued this executive order back in March. He gave various federal agencies, both financial regulators and some non-financial regulators, mandates to look at different issues, to look at some of the concerns we have with the space, but also some of the benefits that the crypto industry and sector could provide, and come up with recommendations about what types of regulation are needed going forward. So I think that we're going to see a fairly balanced analysis. I think we'll see some things around competitiveness and inclusion that the industry is going to be very excited about. I do think we'll see some concerns around, you know, sort of the lack of regulation of dollar-backed stablecoins, which is something that has been discussed for a long time, maybe the need for some spot market regulation. But overall, this should provide a pretty substantive roadmap for policymakers should they choose to accept it as they consider legislation this fall and into 2023.
Now, Blockchain Association has had a seat at the table with policymakers. How have they been processing this crypto winter and all of the drama?
Yeah, well, listen, I think, you know, there's an understanding that crypto is here to stay, right? Like that wasn't always a concern. And even in this market downturn, I think policymakers have even more incentive to try to do something in the space, especially if you look at the beginning of the summer, we had the collapse of Terra Luna. We had a couple of bankruptcies. We had sort of the Three Arrows Capital. You know, there were a bunch of events that had big impacts on consumers. And instead of pushing away from this space, policymakers said, all right, this is a space where we need to make sure that we fill regulatory gaps. We need to better understand what regulations already exist. We need to figure out what are the options going forward. And so, you know, Congress has been pursuing several different bills this year. We saw the Lemus-Gillibrand bill earlier this spring. We've seen the Digital Commodity Exchange Act in the House. We have a new bill in the Senate that attempts to regulate this space. So they've been generating their own ideas. And I think, you know, the executive order process and Congress's effort are going to converge quite nicely to have just an overall more educated policymaking group that is looking at this in a thoughtful, comprehensive way, in a way that, you know, moves the ball forward, but not so rushed that we get the policy wrong. And so I think we're really setting the stage up to get a good bipartisan compromise and fill those regulatory gaps.
But what about the agencies and regulators themselves? Because even though the executive order was seen as a really big step for the industry, a common critique I get when I'm talking to market participants is that it really emboldened each of the agencies separately, that there's a lot of conflict among them on how they define certain issues. Take the SEC and the securities issue when you come to Coinbase in particular. So do you see the agencies consolidating power to one agency or another? And how do you believe that Congress may enable that or conflict with that?
Yeah, well, the executive order did require cross-agency collaboration on different topics. I do think the core issue out there when it comes to regulating the crypto markets, like particularly the Bitcoin markets, you know, those that are truly commodities, is that today neither the SEC or the CFTC has jurisdiction in this space, right? What we need is Congress to come in and say, all right, we have this commodity spot market. Other commodity spot markets, like the grain market, for example, they don't have any federal regulators. So we need to find a new federal regulator to come in and regulate the spot market. And so I think Congress has a choice. What's interesting is that the three major proposals that have been introduced in Congress so far have all pointed to the CFTC as being the appropriate regulator for the crypto industry, probably because they already have regulatory powers over crypto futures and on fraud and manipulation in the underlying market. So I think that that's probably the place it's going to end up. It could also go to the SEC as well, but Congress seems to think that they want to give this authority to the CFTC.
And what does it mean for the SEC if more of that moves over? Because there's so many things that they were looking at, NFTs, other securities issuances potentially here. Do you think the SEC ultimately loses some power over these markets as they've already started on the enforcement path?
Yeah, well, I would argue they don't have any authority over, sort of the pure crypto commodity markets, right? I mean, the SEC has authority over things that are securities, and you can use blockchain-based systems to issue equity, to tokenize shares of stock. When you have something that's truly a security, the SEC is obviously going to have a role to play there. I think the problem has been for innovators is that there really is a big gray area there. It's hard to know when they apply. And what we just need is a framework that addresses these concerns. And, the stakes today are pretty high from a regulatory perspective, right? If you're deemed a security, you're regulated by the SEC. If you're deemed a commodity, a crypto asset commodity, there's no regulator at all. So I think by having a regulator, perhaps the CFTC, to regulate crypto commodities, then there's still going to be consumer protection. There's still going to be market surveillance. There's still going to be disclosures that help give consumers more information and investors more information. And so it won't be such a high stakes decision if something is a security or a commodity. So I think that will help pave the way for a more constructive dialogue. Once if Congress does indeed give the CFTC jurisdiction.
All right, Kristen Smith, Executive Director of the Blockchain Association. Always appreciate you joining us and taking us inside these rooms a bit, alongside our own Shonali Basic. Thank you both.
VK ฟิล์มติดอาคารบ้านคอนโดราคาถูกจริงค่ากันความร้อนสูงสุด 74%.
We believe in the power of ideas. That's why we launched Bloomberg New Economy Catalyst. This platform will help them share their ideas to reshape our world. Bold thinking, breakthrough action. Bloomberg New Economy Catalyst.
Solar energy, wind power, battery-operated cars. The transition from old to new energy forms has investors placing bets on which technologies will come out on top. Bruce Flatt's Brookfield Asset Management sees what it calls massive opportunities. Its new impact fund raised more than $15 billion, and Flatt says it could have raised more. The fund has two targets: companies that need to dramatically curb greenhouse gas emissions, like power providers, and those that are in a position to dominate in clean energy. Brookfield hired former Bank of England Governor Mark Carney to strengthen its environmental, social, and governance investing. In March, Australian utility AGL Energy shot down Brookfield's takeover offer. The firm had aimed to accelerate AGL's transition to net zero emissions by over a decade. Carney signaled that this was no problem. He says Brookfield is reviewing at least 50 potential transactions across a range of industries.
Politics to the world of business. Balance of Power with David Weston. News, analysis, insight from and about politics power players. Weekdays. This is Bloomberg.
With NFL season kicking off, we are exploring the intersection of sports and technology all week long. Today, we're starting with sports betting, now legal in 31 states, with Kansas being the most recent to join the field. DraftKings and rival FanDuel are positioned to maintain their leadership of daily fantasy sports, a market that has ballooned to $4 billion in terms of annual entry fees. DraftKings predicting this football season will be the biggest moment yet for sports bettors. Joining us to discuss, CEO Jason Robins himself. Jason, great to have you back with us. Give us a status update on the numbers and just how much you think NFL kickoff will kickstart an already booming industry.
Well, I mean, this is our holiday season, to make an analogy. So, this is when all the numbers go up, and it's a fun time of year. A lot of work from the team goes into preparing for this. We've launched a lot of new features and products over the last 60, 90 days, including our new Rainmakers football game, which I'm really excited about. And week one's going to be fantastic. I'm really looking forward to it.
You're also launching a new blockchain initiative whereby bettors will be able to collect digital player cards. How will this work, and how big do you think blockchain and Web3 will be for sports?
Well, Rainmakers, which is the product you're referring to, is, I think, one of the most innovative things we've done ever. It takes fantasy sports, which, the idea is you're like a GM and you have players that you get, and it immortalizes that ownership in the form of an NFT on the blockchain. So instead of drafting a player, you buy that player's NFT and you can play that in a game. So it's really exciting because it mixes things that our customers are really interested in, which is the game and this sort of idea of being able to pick your favorite team or your team that you think is going to win, with also a strong interest our customers have shown in blockchain and collectibles. So I think it's really a new way of looking at fantasy sports. We think it's the future of fantasy sports, and we're really excited by some of the early traction we're seeing. There's sales that are going off for big dollars on the marketplace right now.
FanDuel seems to have pulled ahead of the industry in terms of market share. What's your play to counter that?
Well, it's definitely seasonal. We typically do better in the NFL season where we have a big boost of customers. And if you look at the iGaming side, we're ahead of them by a little bit. So we're just going to keep trying to have the best product. For us, we think product is what ultimately will win the customers over. And we think the more people that we get to show some of the new things that we launched this NFL season, the more they'll be excited about keeping their play with DraftKings. So we're just going to kind of keep, focusing on product, focusing on customer experience. We think being the most customer-focused and customer-centric, which entails having the best product and overall experience, is what will win the day.
So, obviously bigger business has also meant at times some bigger losses. Some of your competitors have said they're going to pull back on ad spend this year. How is your spending strategy changing as the market evolves? And also, we're heading into a potentially prolonged downturn.
Well, we've always been very, data-driven in our decisions around spending. So we look for paybacks that meet our threshold, which in the case of customer acquisition is typically 3-year payback or less. Same thing on new states we launch. We typically look for a 2 to 3 year path to profitability timeline. So we haven't really changed that. I will say, though, that with some of the competitors pulling back, we're able to achieve great results without having to be quite as aggressive on the advertising promotion front. We're still being very aggressive. This is an important time of year, so we're making sure that we have a presence out there and we get in front of customers and we get good offers that are interesting to them. But I do think the competitive environment is rationalized quite a bit year over year. If you compare it to this time last year, it's really just night and day.
We've also got a big election coming up. You've got some proposals on various ballots in California in particular. California could become the largest sports betting market in the world next to the UK. You've backed a proposal that would allow DraftKings to offer sports betting anywhere in the state in partnership with various Native American tribes. There are various other proposals that are countering this. What is your polling showing you about the likelihood of your proposal passing, and how much are you prepared to spend between now and November?
We're seeing really good things in the polling. You know, obviously there's a lot that's going to occur between now and the election. It's still about 2 months away, but everything we're seeing in the data is great. And we think more importantly, policy-wise, it makes sense. It's something that Californians want. Those that are into sports betting in California, most of them are already doing it anyway in the illegal market, which is generating no tax revenue and has no consumer protections. And our initiative will generate hundreds of millions of dollars a year to help combat homelessness and mental health issues in California. And we also partner with tribes that are getting a cut of it as well. It'll help especially a lot of the smaller tribes that, you know, aren't as maybe fortunate as some of the ones with the bigger casinos do well, and really will help with education programs and other things for those tribes. So we think it's great for the California sports bettor. It's great for those that want to see real help on, you know, the homelessness and mental health issues, and it's great for the tribes. So we're really excited about it. We think it's great policy for California. Polling numbers look good, but there's a lot of time between now and the election, so we just got to keep getting our message out there, and hopefully it'll resonate with voters.
All right, one answer, one word answer, Jason. Who are you putting your money on for the NFL playoffs?
You know, I'm a Patriots fan, so I got to say Patriots. I'm not putting my money on them, but I'll be rooting for them. But, you know, there's a lot of great teams this year. I'm really excited about the opening game. I think it's going to be awesome. And, you know, it's a really good season, a lot of great play. NFL content has never been better.
Jason Robbins, CEO of DraftKings, great to have you. Thank you. We are at Apple tomorrow. You don't want to miss our special show. This is Bloomberg.
คนละครึ่งมาแล้วที่ฟู้ดแพนด้าส่งฟรีพร้อมรับเงินคืนสูงสุด800 บาทใครใช้คนละครึ่งสั่งฟู้ดแพนด้าเลย
At Bloomberg, we believe in the power of ideas. That's why we launched Bloomberg New Economy Catalyst. It's a community of global leaders and innovators who are blazing new trails to transform business and government. This platform will help them share their ideas with the world and provide access to the resources they need to bring them to life. Bold thinking, breakthrough action. Bloomberg New Economy Catalyst.
Facebook but like your friends? If you live in Europe, your life might be about to get a whole lot easier. Starting in 2024, the European Union is going to require big tech companies like Meta and Apple to make it possible to send messages between their messaging apps. That might let an iMessage user chat with a WhatsApp account. The technical name for this is interoperability, and it's part of the EU's Digital Markets Act, legislation intended at loosening big tech's grip on the digital market. The EU's thinking is that messaging locks users into the tech giants' platforms because leaving WhatsApp or Facebook Messenger means losing the ability to communicate with all your friends. But thanks to the EU, you'll be able to send a message from a smaller competitor like Viber to someone using iMessage. And if every company signs on, then you might be able to communicate with everyone using just a single messaging app. This change clearly would make life easier for consumers, but it's quite controversial. Some technologists think it could break end-to-end encryption or stifle the innovation that makes messaging platforms fun. And if smaller companies like Signal or even the big tech companies decide they don't want to use these new technical standards to connect their massive messaging platforms, some argue the law is completely useless. It will take several years before the EU's rules go into effect, but if this new interoperability requirement works, it could have a huge impact on big tech's behavior and the way you communicate. And of course, where the EU leads in terms of tech regulation, the US often follows.
Most of us don't spend much time thinking about the grid, the dizzyingly huge system of cables, transformers and outlets that reliably powers our lives. It's an easily ignored, change-resistant part of the modern world, and that's the way we like it. But as we move towards less planet-melting ways of producing electricity, the grid is going to have to evolve too.
We're seeing so many countries and governments announcing high targets when it comes to decarbonization and being climate neutral. But this is just one side of the coin. It's not enough to simply generate green energy. We also need to make sure that this is transmitted and distributed to the end consumers.
The grid of today just isn't equipped for renewables. So a new kind of grid is starting to take shape. The supergrid.
When you've had your fill of IPOs, ETFs, and CPI,
tune into the lineup for some NFL, NBA, and MLB.
Catch the lineup right here on Bloomberg.
This is Bloomberg Daybreak Middle East. Our top stories this morning.
China sends its most powerful signal yet on its discomfort with yuan's weakness, setting its preference rate with the strongest bias ever. We're also on watch for yen intervention as it heads for the worst year on record.
New Prime Minister Liz Truss promises a major package of support to tackle the soaring energy bills. Economists think it will have a sweeping impact on the UK economy and may manage to bring down red-hot inflation.
Saudi Arabia cuts oil prices for customers in Asia and in Europe as COVID lockdowns and sagging economies cool energy demand. Crude tumbles to the lowest level since January.
A new survey shows about half of US workers could be described as quiet quitters, meaning they fulfill their job description but psychologically detach from their work. What are the implications for employers? It's just gone 8 a.m. across the Emirates. I'm Manis Granny in Dubai.
And I'm Yusuf Gamenadine right alongside you. The dollar pain is spreading from emerging to developed markets, and 2/3 of respondents in a Market Life survey suggest that there's more upside for the Bloomberg Dollar Index. We're seeing that ripple through the FX space, the greenback strength. On euro dollar, we are at the moment back below 99 cents, about 1/5 of 1% off. Dollar yen in the last couple of minutes pushing past 0.9 of 1%. That's past the 144 mark. The worst annual drawdown on an annual basis since 1979, and cable under pressure as well. Let's flesh out the yen story in more detail because we dropped to a quarter-century low, and it's making it tougher by the day for the BOJ governor, Haruhiko Kuroda, to stick to his line that massive monetary support is still needed. We're getting a little bit of verbal intervention, right, from the chief cabinet secretary. He said the government is going to continue to watch the forex markets with a, quote, high sense of urgency, and they're going to take the necessary responses if this sort of move continues. So far, no action thus yet. Let's get to the bond markets as well, because Treasury yields jumping. Wow, what a big move in some of these key 10-years. And U.S. 10s were back above 330, so 335.12. What's interesting to note is that we had a bonanza with U.S. companies tapping the market. So that includes Walmart and McDonald's, extending a worldwide wave of issuance. We had 20 issuers, $30 billion to $40 billion of new supply. The price that is the most since last September, Manis.
Well, it's that explosion in real rates, Yusuf, that has taken a bite out of risk. Real rates are trading at around 2%. Stocks are lower this morning across the board. You've got the Nasdaq there coming down by 0.5%. Likewise on the S&P. But it's the Russell, which is the breadth of the United States of America, down for the 7th session in a row, the longest losing streak since 2008. Now, the ISM services data yesterday emboldens the narrative of a soft landing, but it enables the Fed to jump through the window and deliver a 75 basis point hike. Mike Wilson at Morgan Stanley, he's the arch bear, still says 13% lower to go in these stocks, 3,400. He's worried about earnings, whether there's a recession or not. So the stock story takes a flesh wound this morning from the real rate risk rising. To the oil market, there's a real risk of a material shift to the downside, below $87 on WTI for the 3rd straight session. You can see there 85.28 is where we are. Saudi are cutting their prices to Asia and Europe as demand cools. That is a manifestation of the concern that has been aired from Saudi Arabia. Prince Abdulaziz bin Salman, of course, delivering that leadership symbolic 100,000 barrel cut. They are attentive, preemptive and proactive. Oil is shaken this morning on the China export data weakening and the rapid rise in the dollar. Jules is in Singapore. She's got a few other rapid issues to deal with in markets. Jules, what have you got?
Yeah, worrisome Wednesday, they called it in the print story today, Manus. Not a lot of bright news out there today. We are seeing Asian stocks still holding at this 2-year low and a lot of FX pain outside the yen and the yuan. We saw the PBOC once again set a stronger fix, the strongest on record. I know you're going to talk about that in more detail shortly, but where we are seeing a little bit of upside is coming through in some of these Chinese chip players, and that's after we saw news on state TV that President Xi is calling for a stronger effort to strengthen the sector. In terms of some of the other currency pain that we are seeing, well, you've got the Kiwi at May 2020 lows, and we've got continued weakness coming through in South Korea's won, which is actually the worst performing Asian currency, still at that 13-year low. And we're hearing from Yonhap that there could be further meetings by FX officials and banks to really try and stem this weakness and potentially some intervention if we see that won at 1,400 to the dollar. What does it mean, though, when it comes to Asian stocks at these 2-year lows? Are they attractive? Let's have a look at my chart, because we are actually trading below 12 times forward earnings when you take Japan out of the picture here. Goldman, though, seeing deeper earnings cuts for Asia in coming months. They say defensive sectors and ASEAN equities can see better earnings revision. So just coming back into that theme that Southeast Asia is probably going to be the strongest pick at the moment amidst this equity pain. Yusuf.
Yeah, a lot to take in there. Thanks, Jules, for running us through all of that. Julie, it's Sally there. We'll compare notes later on in the program. I want to get to another top story, and that is China, because they've sent their most powerful signal yet on their discomfort with the yuan's weakness by setting the reference rate for the currency with the strongest bias on record. Let's get more with our China FX and rates reporter, Tanya Chen. So, Tanya, with striking distance of 7 to the dollar, how important is it for China to defend that level? What's been happening on a price action point?
So we are just a couple of pips away from 7. So the 7, obviously, as we said yesterday, that it's just a key psychological milestone. The PBOC doesn't necessarily need to stop the trend towards 7. Obviously, they couldn't today with their fix. But what they're looking to do is to slow down that depreciation pace. And if you look at it, though, from kind of just a broader currency perspective, as you were just discussing about the yen, the moves last night were very much obviously dollar driven, right? And so that's why you're seeing kind of the pain threshold in the dollar yen kind of creeping up a bit. And in terms of just from the yuan trade weighted valuation, actually the CFETS basket actually kind of rose because the yen was so weak.
Tanya Chen, we're reunited. It's good to see you in a whole other world, on the other side of the world. Now talk to me, because you would berate me if you didn't give me some fast facts on this. Where is the yen headed? Is there intervention discussion there? Niro Robini was talking to us in Doha, and he said, break 140, and the Bank of Japan will have to react, maybe even move on the yield curve control. What are you thinking?
It's been a pretty crazy year for the yen. I would agree with you on that. I think the next key technical level to watch would be 147.50. That was the high of dollar yen in 1998. I think that's also last time when they did intervene. Just keep in mind that I think they need to have G7 consensus to intervene. So we'll watch for that. I think the positioning in the options market is showing kind of that bearish bets on the yen are growing.
Tanya, good to have you with us. Tanya Chen, our FX and rates reporter on the markets. Liz Truss has promised a major package of support to tackle the soaring energy bills. She spoke in a rainy Downing Street on day one as UK Prime Minister.
I will deal hands-on with the energy crisis caused by Putin's war. I will take action this week to deal with energy bills and to secure our future energy supply.
Well, the economists at Barclays, Berenberg and Bloomberg Economics think Truss's package to rein in the soaring prices will have a sweeping impact on the UK economy and may manage to arrest inflation at July's reading of 10.1%. So is it good news, bad news? Enda Curran is with us. So fiscally, either it's a big roll of the irresponsible dice, or from an economics point of view, it is a Damascene moment in the inflation fight. Which is it?
Well, a near-term game changer for the current inflation story, Manus. That seems to be the reaction among several economists. As you mentioned there, the thinking is that if the government does intervene in the energy market and put that price cap on household energy bills and offer support to businesses too, then you will start to see a fairly dramatic turnaround in the rate of headline inflation and would bring it back to where the Bank of England wants it, around 2%. And the thinking then, of course, is that that would take pressure off of the Bank of England to raise interest rates. Bloomberg Economics also making the point, by the way, that they think if these measures were rolled out, it could even mean that the UK avoids a recession. Now, as you mentioned, of course, there's going to be a significant amount of borrowing needed to fund this. We'll have to see what the exact pound figure is when they tot up their calculations. And the other impact might be that longer term, maybe nearer term, you get a control of inflation, but longer term, you're going to stoke store up longer term inflationary pressures in the system because of the amount of money you're going to be spending. So there's no doubt that here and now, economists say if they go through with this, it certainly will take pressure off inflation. A longer term picture might be more complicated.
And fantastic analysis. Thank you for highlighting those key points at the end of current there. I want to talk about a generational shift that we're seeing in terms of attitudes to work, Manus. We've talked about this quite a bit in the last few weeks. And coming out of Labor Day, there's definitely a thinking that the language is going to be tweaked by employers to try and bring people back to the office.
The question is, culturally, are you a quiet quitter? Does your company even consider what a quiet quitter could be? We've got this poll from Gallup, and they say they talked to 15,000 people. And if that 15,000 people, over 50% said that they were quiet quitters. In other words, they're actively disengaging. They're not quite sure what their management want them to do, but they're going to do exactly what's in the job title and not much more.
Yeah, so some examples in terms of what companies are doing. Jeffries are going to get employees to come in on a more consistent basis. They're not going to check badge swipes, and they have no issue with working from home. Citigroup, they're allowing employees on a hybrid work schedule to work remotely for 2 weeks in August from anywhere within the country of employment. But nonetheless, this is going to be something where maybe the bargaining power of employees starts to move towards employers as the recession begins to bite, right?
I just can't imagine doing a Bloomberg review where you go in and you're doing the at the job and not doing any more. And this is the cultural issue. This is the crux of what quiet quitting is. Is it acceptable to do what your job described? Or is it an assumption you will always do more? And on the Gallup poll, Gen Z and younger millennials under 35 are the one cohort who don't know exactly what their bosses want them to do.
You have a bit of an overlap there between the culture towards work in the United States and at the same time our own culture here at Bloomberg, which is also very much going above and beyond the call of duty. But I wouldn't call it quiet quitters right away. I think in many cases there's a good argument to be made about delivering on what's required.
Well, the other side of the trade is this, because there's always a bid and an offer. The insight is underpinning the idea of a quiet firing, another term getting traction in the workplace.
Well, I'm glad you're not our manager.
Okay, let's make sure. One lady who never quietly quits on anything and goes the extra mile every day, she is, of course, Julia Tsai, and she's in Singapore.
Manus, I don't think you and I know how to be quiet. Well, California has lowered its grid emergency level as fears of blackouts ease. Earlier, electricity use reached a record 51 gigawatts. Power demand soared with temperatures rising above 50 degrees Celsius across much of the state, and schools and businesses reopened after Labor Day. The emergency declaration allows officials to order some large power consumers to shut down. Well, the SEC is warning US audit firms to be cautious about taking on Chinese firms that trade in New York. Regulators in Washington and Beijing are in a dispute over audits that could see about 200 companies kicked off American stock exchanges. China does not allow US scrutiny of companies' audit work papers, although US watchdogs will travel to Hong Kong in coming weeks to begin some inspections. Pakistan is facing more flooding after its largest lake breached a retaining wall. Water from Lake Mancha inundated hundreds of villages downstream after it burst its banks and could force thousands more people from their homes. Pakistan's planning minister says damage from the floods will be far greater than the $10 billion initially forecast. More than 1,300 people have been killed. And Japanese prosecutors have arrested 3 Katakawa executives as they investigate alleged bribery in the Olympic sponsorship process. A fresh warrant was also issued for former Tokyo 2020 board member Haruyuki Takahashi. It is alleged that Katakawa paid Takahashi around $489,000 in bribes between 2019 and 2021. In a statement, the company says it will fully cooperate with authorities. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Yusuf.
Thanks, Jules. Let's get you all a bit of a preview of what else is to come on the show. Daman Investments' Ali Aladou is going to join us to discuss the region's equity markets, which are still continuing to outperform relatively. We're going to get the outlook as oil hits a January low.
But up next, the dollar strength is rippling across the asset classes. We get the outlook and analysis from Brewin Dolphin's Janet Mewey right here on Bloomberg.
think is the future of the U.S. dollar as world reserve currency?
What we are watching is actually not the competition between the US dollar and Bitcoin. I think actually what you're watching is most of the people adopting Bitcoin as a reserve asset, but I may not be able to get access to dollars for whatever reason. And so instead I'll opt into Bitcoin. I only need an internet connection to do that. For the next 50 years, you are absolutely going to see a monetary revolution. But what you're going to see in the short to medium term is the strongest fiat currencies will hold on for much longer than we probably admit.
I want to disagree a little bit with what Pomp was saying. The moment that I can buy my food, my clothing, and my shelter in Bitcoin will be the moment I don't really want to hold on to a government currency. Anyone who still doesn't have a Bitcoin wallet is going to see that cataclysmic event and be left on the wrong side of it.
We believe in the power of ideas. That's why we launched Bloomberg New Economy Catalyst. This platform will help them share their ideas to reshape our world. Bold thinking, breakthrough action. Bloomberg New Economy Catalyst.
As the new season dawns, economic sentiment and outlook remain very fragile. Stock markets remain down. Central banks are raising interest rates as 40-year high inflation persists. Hawks at the Fed are looking for another 375 basis points in interest rate hikes before the year end. They argue that recession is already here, the yield curve is inverted, and the slowdown is going to last longer than expected without this significant action. Higher for longer appears to be the new Fed mantra.
Moment. People were talking about that all day yesterday.
Everything you need to get set for the start of U.S. trading. Bloomberg The Open with Jonathan Farrell. Drilling down on the numbers and preparing you as only Bloomberg can. Weekdays on Bloomberg.
The markets are looking very, very closely at political pronouncements. And the UK does face some serious headwinds. We've got a big balance of payments challenge. The pound has had a pretty tough time over the last 6 months. And I think there's a very strong need for the government to provide not only reassurance to its citizens that it will provide short-term help to get through this winter, but to markets that it does get the fact that it can't keep on printing money to bail out, bail people out from these challenges.
Salutary warnings there from the former UK Chancellor Philip Hammond with his message for the new Prime Minister Liz Truss. Turning to the markets this morning, dollar strength, it is pervasive, prompting verbal intervention from Japan's government and China's most aggressive yuan fixing ever. So you are seeing the dollar up by 0.4%. Now that is rippling through to the equity markets, Asian stocks, European futures, all on the downside, along with the US taking losses. 30-year Treasury yield, well, that's the highest since 2014. A lot to unpack. Let's take it to Janet Mew. She's the head of market analysis at Brewin Dolphin. Janet, I want to get to the energy intervention in the UK and Philip Hammond's warning to Liz Truss that the markets are watching. And if you look at the pound, down 6% in August, rates are up 80%, the highest since 2014. When you look at this intervention in the market, do you believe that it's more of an inflation suppressant than fiscal irresponsibility? Where do you come down in the analysis?
Hi, good morning, Manus. Thanks for having me. Yeah, it is a very difficult situation because the government, if they do nothing, then we are certainly going into a recession, and sterling assets will also be negatively impacted, and households will suffer, businesses may go out of business. So it is very difficult. But on the other hand, we do feel that this, in a certain way, is not quite fiscally sustainable, because we're talking about potentially £200 billion worth of support. And compared to the pandemic, the UK spent about £300 billion. So it's quite comparable. And you're talking about adding 10% to the current 2.3 trillion debt that UK is having. So we're talking about a significant increase in the budget deficit, and also we are also having a very serious current account deficit problem. So very serious twin deficit, which is not great for sterling, is not great for gilts. So this is quite problematic. And there's also moral hazard problem, because the government is literally pledging uncapped liability and support. So I think that would be more hazard for companies. Yeah.
I mean, as we speak, we're seeing the dollar ripple through the yen, and we're seeing more losses there. So a red headline hitting the Bloomberg, dollar yen now at 144.25. So that is now a move by 1%. This is not over like 2-3 trading sessions. This is intraday. I take you back to September 22, 1985, Janet, because when I see these dollar dislocations, it reminds me of that. Basically, you had the Plaza Accord where the U.S. government sat down with counterparts in Europe and in Asia, specifically Japan, and agreed to depreciate because on a systemic level, it was starting to break a lot of things. Are we going to see something like that as we count down to the G20 deliberations, that there is a more holistic approach to managing these currency disparities?
Yeah, I think there are increasing signs that countries are worried about the dollar strength. We're seeing a very strong dollar at the moment. And we think that in the near term, that should continue because we're talking about one of the largest currency basket is euro. And we are having significant uncertainty over the gas supply problem. And it is going through, we are going to see this continuing through the winter and perhaps the next few winters. So we're talking about huge uncertainty there. Sterling as well, we have already covered lots of uncertainty over the fiscal sustainability of the UK government. So we're talking about prolonged dollar strength potentially. So I think government officials, they will have to come together to discuss what may happen or how they may do about it. But maybe they don't actually have a lot of solutions. I think central banks' hands are very tight at the moment. And so it is a very tough situation for everyone.
Given the FX dislocations, how does that play into the equity story? Does it embolden the U.S. equity exposure? Or at any juncture, do you think that the currency dilution for Europe and the UK make those equity markets appealing? Or what else has to happen on the FX side before you jump in long into the UK and Europe?
Yeah, valuations has certainly turned more attractive for the Europe ex-UK market. But I think primarily because of the uncertainty of the gas situation, we're talking about unprecedented situation, and there's really limited options that governments can do. So we're very cautious on that. We don't think it's the time to add to those equities yet. And especially Europe ex-UK indices, they have lots of chemicals, industrials, autos companies that will be very heavily impacted if there is an energy rationing. And for UK assets, we don't think it's the time yet because there is just this uncertainty over the fiscal situation. And I think there is a general sense of loss of confidence a bit in the UK assets at the moment. We don't think it's the right time. And I think actually for the dollar strength, it is actually disinflationary for the U.S. economy at the time when many other economies are facing double-digit inflation. So I think on that front is marginally more positive for U.S. Yeah.
Janet, we had some comments from Mr. Barkin, one of the key voices at the Fed. He spoke to the FT. One of the lines is Barkin saying that rates must stay high until inflation is under control, until inflation eases. Says real interest rates need to be above zero, that the general bias is towards moving more quickly. What do you think the Fed's action plan looks like until December 31 this year?
Yeah, I think there's little doubt for everyone now that the Federal Reserve will keep hiking. We could be talking about another 75 basis point hike. I think to a certain extent, that's a lot being priced into financial markets already, right? We're talking about Fed funds rate reaching nearly at 4% next year. So I think that's a lot is being priced in. I doubt they need to move even higher than that because the aggressive Fed that we're talking about is moving from the current level toward that 4% level. And I think, as I mentioned, there is this disinflationary impact from strong US dollar. There are other disinflationary impacts, for example, the lower gasoline prices that other places are not experiencing as much at the moment. And so we do think that inflation is more likely to peak and slow more rapidly compared to the other economies. And as such, I think the Fed, they may have to go to 4%, but it's largely priced in, and I doubt they will have to go much beyond that for next year.
A lot to factor in there, Janet. Thank you for stringing it together for us. That's Janet Mui, the head of market analysis at Brewin Dolphin. So much more to come. This is Bloomberg.
คนละครึ่งมาแล้วที่ฟู้ดแพนด้าส่งฟรีพร้อมรับเงินคืนสูงสุด800 บาทใครใช้คนละครึ่งสั่งฟู้ดแพนด้าเลย
Companies now, they're getting hundreds, maybe even thousands of applications. So software has come in to automate the process.
You want to write your resume for robots, not for humans. The only job your resume has is to be comprehensible to the software that is reading it, because that software or robot is going to decide whether or not a human ever gets their eyes on it.
These things are programmed by a certain segment of the population that might not be totally inclusive or not be fully aware.
Concerns about how this technology could exacerbate discrimination. For the FTC, I think foremost, the FTC needs to be making sure that we're fully understanding this technology.
We don't trust companies to self-regulate when it comes to pollution. We don't trust them to self-regulate when it comes to workplace comp. Why on earth would we trust them to self-regulate AI?
Unbridled dollar strength and a disemboweled yen makes for a pretty toxic mix. You've got the dollar rising by over 1% against the yen and a disembowelment, really. It's the worst year ever for yen, down 19%. We've got verbal intervention this morning. You're looking at a break of 143 for the first time since 1998, and that is when you last had active intervention in this market. So we had some verbal intervention, Yusuf, from the finance minister, etc. But at the moment, we're careering lower on yen, higher on dollar.
Yeah, this is like a Japanese bullet train, and we're slicing through some of the key handles here. 144.35 for dollar yen. Let's get to the Middle East markets as well. Get you a bit of an overview of where we stand. We had, of course, the factoring in of the reversal in some of the oil price action, and as a result, sentiment was slightly lower in terms of risk appetite than usual. So you saw a downside in the Tadawul, about 0.9%. Al-Rajhi Al-Imna Bank under pressure, but you did see some glimmers of upside in the Dubai index. As always, the contrarian trade, Manus.
Well, it's below $1 trillion. We're talking about the crypto world, the crypto family, Bitcoin. By the way, the trading range on Bitcoin has been quite tight, but the whole family is worth now less than $1 trillion, down 1.4% on Bitcoin this morning, Yusuf.
Yeah, maybe that's a bit of a warning sign. That's what the Markets Live team is writing about. Much more ahead. This is Bloomberg.
ฟ้าสมาร์ทบอร์ด SCG เหนียวจริงยิงไม่แตกแบรนด์อันดับ1ของไทย
We believe in the power of ideas. That's why we launched Bloomberg New Economy Catalyst. This platform will help them share their ideas to reshape our world. Bold thinking, breakthrough action. Bloomberg New Economy Catalyst.
The future of the entertainment business. Where do you think it's going? You think there's going to be movie theaters forever?
Anybody that says to you
and I won't name names, that says the movie business is over, are fools.
Strong enough to stay, we will never.
Markets are preparing to close, but the day is not over yet.
Stock that is now up about 45%.
A lot of volatility right now.
You need the power of the Bloomberg terminal to get you market-moving data before anyone else.
These numbers are much higher than expected.
Upgraded today to overweight.
You need top analysts to bring you exclusive global insight into cross-asset markets.
The muni bond market.
China is a really big focus.
Bitcoin ain't playing along today. It's going to be short-term.
Bloomberg Markets, The Close. Weekdays on Bloomberg.
This is Bloomberg Daybreak Middle East. Your top stories this morning.
China sends its most powerful signal yet on its discomfort with the yuan's weakness, setting its reference rate with the strongest bias ever. Meanwhile, the yen slides 1% versus the dollar. It's on track for the worst year on record.
New Prime Minister Liz Truss promises a major package of support to tackle the soaring energy bills. Economists think it will have a sweeping impact on the UK economy and may manage to bring down red-hot inflation.
Saudi Arabia cuts oil prices for customers in Asia and in Europe as COVID lockdowns and sagging economies cool energy demand. Crude tumbles to the lowest level since January.
And a new survey shows about half of US workers could be described as quiet quitters, meaning they fulfill their job description but are psychologically detached from their work. What are the implications for employers? Let's get across to Juliet Saleh. She's no quiet quitter, is she? She's in Singapore, working furiously. Jules.
Hey, Matters, what an ugly look for the GMM here. Really, the only thing that is up is, of course, that dollar, which is weighing very heavily into currency markets and equity markets here in Asia, with the regional benchmark index at that May 2020 low. Once again, a very aggressive move by the PBOC to try and halt the yuan's decline, not helping with the renminbi down by about 1/3 and getting close to that 7 to the dollar line. But today's fix was the strongest in records going back to 2018. We're also continuing to watch the weakness in the yen, of course, but also South Korea's won, which is the worst performing currency today. And we're hearing from Yonhap News that once again there is efforts underway, according to this report, by FX policymakers in South Korea and bankers to really try and look at what can stem the decline in the won, which is trading at this 13-year low. Foreign funds continuing to sell as well. And when it comes to the equity picture with stocks at these 2-year lows, Yusuf, a lot of calls out there as to how much valuation is out there. Goldman seeing deeper earnings cuts for Asia in coming months, but they do say ASEAN equities and defensive sectors look, I guess, the best out of what you're seeing in the sell-off.
I want to zoom in on the dollar-yen trade here, Jules, because there's a lot of speculation about could halt the yen slide. This verbal intervention clearly isn't going to cut it.
Yeah, absolutely. Well, we know what could cut it is Bank of Japan policy change. It really is about the yield differential as to why you're continuing to see this yen weakness. But JP Morgan also saying, look, open the borders. You'll start to see tourists coming in. Everybody wants to get back into Japan. A weaker yen would be a very attractive reason to go there too. But I'm going to read from their report. They're saying discussing levels like this is irrelevant when macroeconomic factors remain the same. The dollar yen is like a kite with a broken string, and the only way is to wait for the moment when the kite is torn to pieces. So they're saying, given that this is not likely to change anytime soon, the BOJ policy or this open border policy, you could continue to see weakness in the yen. They're saying you could see a level of 147 to the dollar. Manus.
Jules, thank you very much. Beautiful pictorial description there of a yen unhinged. Abu Dhabi, the sovereign wealth fund Mubadala is said to be nearing a deal to buy Fortress Investment Group from SoftBank. That could value the asset manager at more than $2 billion. Simone Foxman has been tracking this story from Doha. So, Simone, acquisitions are buying by Mubadala. What's behind the move?
Well, the investment
investment case a little bit more obvious for SoftBank than it is necessarily for Mubadala, even though this is a deal that has potentially been in the works. There have been rumors about it for several years. On SoftBank's side, SoftBank's been trying to divest assets in order to cut expenses and therefore boost earnings. This is something that Masayoshi Son actually confirmed, this potential divestment of Fortress in an earnings call last month. And we have seen other divestments, its stake in Uber, and it's been looking to divest, in fact, other things. From Mubadala's end, and I think this goes for sovereign wealth funds generally that have been interested in buying private equity stakes or whole private equity companies, there's this desire to get preferential fees essentially on managed assets. There's been a desire to see co-investment deals early. Those things a private equity firm might bring, but the challenge has always been getting those really extensive fees from the private equity manager back to the private equity owner. That's why, in part, Fortress lost 2/3 of its value between its IPO and the time that SoftBank acquired it back in 2017. Just very hard to be a private equity owner, so you have to really want to do it, but it appears that Mubadala does indeed want to do it and is willing to pay at a value of $2 billion for the opportunity to do so.
And then, Simone, Saudi Arabia has cut the oil price for customers in Asia and in Europe. I mean, this shows that they are extremely concerned about the demand side of the equation, doesn't it?
Yeah, really doubling down after that OPEC plus production cut that we saw, a surprise to markets. Mind you, this is coming from the widest spread, the widest differential between the premium that Saudi Arabia was charging to customers in Asia and Europe. So we're coming down on that premium, but it's not all the way, it's not negative or anything like that. But for sure, this confirming some of that skepticism from Saudi officials that we've seen about Europe's economy and the like. And Asia's economy as well, those lockdowns, ongoing lockdowns in China. However, there are a lot of unknowns essentially in what happens in the oil market, political disruptions in Libya and Iraq, the outcome of this ongoing war in Ukraine and the potential for Iranian crude to return. Again, the message here from analysts, really volatility ahead.
And then in the GCC, we have countries here asking Netflix to remove videos that they call offensive. So what are the details here?
Well, this message coming from the GCC countries and then sort of echoed by some specific nations as well, really seeming to target programs that show characters who are gay and lesbian. It's really an intensification of some policy that we've seen trying to diminish the, the view of LGBTQ values across society. We saw Qatar, Saudi Arabia seize rainbow-colored children's toys and very publicly do that over the past couple of months. A lawyer in Kuwait had previously called to ban Netflix there for a different program that he argued violated Kuwaiti values. And then remember, Disney's Lightyear was banned in countries across the region for showing a scene of two women kissing. Netflix and other providers have in the past censored content in order to comply with local laws. But this is a time when there's a lot of focus on this region, particularly around the World Cup on a popular basis. There are going to be lots of people coming here, lots of people experiencing the culture here. And frankly, we haven't seen moves, specifically from Qatar, we haven't seen moves on LGBTQ policies, moves to decriminalize same-sex relations in the same way we've seen moves on worker rights, for example. So I think this is an area we could see continued criticism, particularly as we go into the end of this year, particularly as more people come to the region because of this very popular global sporting event.
Yeah, definitely surprising to see some of these moves by governments, given their push to open up and fully integrate with the rest of the world and catch up with the times. Simone, thank you for that. That's Simone Foxman at the Qatar Financial Center in Doha. I want to get to stocks in this part of the world because they saw both positive and negative price action yesterday as investors reacted to a new sell-off in oil prices. Brent and WTI have retreated to the lowest level since January on concerns of a global slowdown. Let's get to Ali El-Adoui. He's the head of asset management at Daman Investments. Ali, last time we caught up, you were already switching to a bit of a defensive stance. You were concerned that it is going to get weaker in terms of the economic momentum. Are you ramping that defensiveness up this morning?
Morning, Yusuf. Good morning, Manas. Well, we have been having a defensive stance for the past two quarters. Our allocation has been in terms of cash allocations, in terms of investing in defensive names, has been in focus. For us is that the region has benefited a lot from oil prices, and it's going to still continue from benefiting from that, especially on the reform side. If you look at break-even points for GCC economies have dropped significantly for the past years, and that is because of the reforms that are being implemented. For us is that being defensive at those points is key because we have a very hawkish Fed. We have geopolitical conflicts globally. On top of that, the volatility of oil prices will somehow have a slight impact on regional names. So for us is that being defensive at this point, holding some cash on the side, will help us find good opportunities.
We'll come to that oil call in just a moment. When the Saudis are cutting prices of oil to their customers, I worry. Now, what to do with your cash? We've got another IPO. Let's go. This is Salik. Yusuf's got a new car. He's up and down that road.
I've ramped up my cash balance.
He's singularly adding to the cash flow of Salik on a daily basis. I'm in an Uber. I'm poor. Right. Let's be having you. If you bought TCOM, tanked. If you bought DEWA, rampant tanked. Are you going to advise clients to buy this Salik IPO?
For Yusuf's investment as a cash flow impact, the investment case for Salik.
You're setting up these Salik tolls everywhere.
Come on a serious note now. Would you put some of that cash to work in Salik?
Definitely. Look, the thing is, if you look at past IPOs in the UAE, what IPOs that did well are IPOs that have actually been sold an attractive valuation to investors. And I think when you leave some money on the table for investors, it will react positively to share prices, and you will see higher demand from institutional and long-term shareholders. Salik at this stage is still in discussions with investors in terms of valuations, and we're still waiting for the announcement. From our side, we are actually asking for decent yield, especially looking at currently with current interest rates, is warranting higher payouts for investors or high dividend yield.
I mean, I can imagine the bar is quite a bit higher because, as Mans was just saying, a lot of people came out of the gates with the last IPOs, and yes, you got a juicy dividend yield, but you have a capital depreciation. In terms of the other opportunity set in your research, you identify Saudi banks. That's been a very popular call for a very long time. Is that back in fashion now that it's corrected over the last quarter?
Definitely, it's back in fashion. I mean, we see opportunities. We're very selective in banks in Saudi because we're focusing mainly on corporate banks. Currently, with the strength in growth in the GDP in Saudi, provisioning is stabilizing. So, with NIMs expanding, that's good news for the banking sector, especially on the corporate side. And we're seeing loan growth, year-on-year growth, and and since the beginning of the year. So especially on the July data that came out from SAMA last week. So for us is that the call in Saudi bank is still valid, but we're very selective.
To be fair, the earnings numbers have been very substantial. I think you identified that as up 54%. And to be fair to everybody, for 6 years I've been coming here and everybody's long Saudi banks. So well done. But there is a nervousness in terms of the oil price. And the oil price underpins everything in terms of psychology, spending, consumer and industry. And here we are. Prince Abdulaziz bin Salman, you covered it when I was away yesterday. Attentive, preemptive and proactive. But the risk at the moment, 65 million people are locked down in China. We're sub $87. Are you more worried about an extreme move to the left on the demand scenario than you are to the right on the war?
I mean, OPEC has made it clear that they will be proactive in terms of supply if there will be weakness in demand. Currently, if you look at oil is still in backwardation.
Yes.
Which is a sign that there is, I mean, demand is still there. However, from looking at it from a global weakness in economy, especially in China, especially in Europe, you might see some volatility in oil, or oil dropping down for the short term, on the short term.
Okay, Ali, thank you very much. Ali El Adu, the head of that. You didn't actually give me a level on oil. I let you off lightly. Did you give a level on oil? Go on, give a level on oil.
$85 to $90.
There you go. Brave man. Ali El Adu, head of asset management and demand investments, put on the spot, and he answers. Plenty more ahead on Daybreak Middle East. This is Bloomberg.
You will put a woman on Mars. You will bring forth global cooling. You will be the first chief crypto officer. Because when you subscribe to Bloomberg, you won't just get news. You'll get insight into limitless possibilities, knowledge, and inspiration to feed your ambition. So before you invent, pioneer, disrupt, before you change the world, Bloomberg.
At Bloomberg, we believe in the power of ideas. That's why we launched Bloomberg New Economy Catalyst. It's a community of global leaders and innovators who are blazing new trails to transform business and government. This platform will help them share their ideas with the world and provide access to the resources they need to bring them to life. Bold thinking, breakthrough action. Bloomberg New Economy Catalyst.
The yen's plunge to a quarter-century low is worsening. This is the intraday status. So we are just around the 140 handle for dollar yen, just below it as we speak. Still the move, 0.8%. Interesting that the verbal intervention is being ramped up, but the reality is it's not bringing any change. So at what point does verbal change into practical intervention with serious both short-term and longer-term ramifications for these markets, Manis?
Yeah, my favorite line is from JP Morgan. Dollar yen at this level, above 143, it's like flying a kite with a broken string. Jules brought it to us. The only way to stop it is to wait for a moment when the kite is torn to pieces. And that is yield curve control. Needs to be dismantled, according to Nouriel Rabini. Okay, we'll keep an eye on that dollar yen throughout programming.
It's beautiful poetry, by the way.
What, from the analyst?
Yes.
Or yes, it is. It's beautiful. It's sort of the image of this sort of untethered kite up there in the air, where our thinking goes every day before we start this show. But let's circle back. Let's get back to Middle East markets. Ali's gone, so we don't need to buy any more Saudi banks. Where are we? Farah El-Barai is with us. I just got back from Qatar. It was lovely, and they've got lots of e-gates. It's a bit hot, to be fair, outside. And I would warn everybody who's coming to the World Cup, bring your fans. Farah, what's going on in Doha? What are the expectations? How's it going to play out in the market? What's the take?
Well, QNB Financial Research Manis, they expect naturally the World Cup to be super supportive to the Qatari economy, especially in the long run, where they expect that this will draw in some more tourists down the line by 2030. They expect sectors such as construction, real estate, tourism, all of these to benefit that and trickle down to those listed companies on the Qatari exchange. Looking at historical performance, they're saying countries that hosted the World Cup actually outperformed the the world index, the MSCI World Index, by 4 percentage points. So that could mean that if everything stays the same, Qatari stocks could have some more upside as opposed to the rest of the world.
When I look at some of the Gulf stock indexes over the last 5 trading sessions, there's a level of disparity that reminds me of the kind of differences we see to the S&P 500. What stood out to you?
Well, over the past couple of weeks, or rather 3 weeks, Yusuf, we've seen quite a bit of weakness in the region as opposed to the trend that we've been seeing so far in this year and, of course, last year. Saudi Arabia, for example, shed about 5% so far this, over the past 3 weeks. It's down for the weekly streak is the longest since June. So that oil price weakness, the risk-off sentiment that we're just seeing globally, it's affecting flows, it's affecting the performance in our region. And it's a little bit of a across-the-board sell-off. We have seen Amar properties sink quite a little bit a few days ago. So it's just, it's not looking very great at the moment.
And then Egyptian stocks rebounding. I mean, a great deal of debate here over the currency and over the IMF program and what will that mean. But how does it play out in the equity narrative?
Absolutely. As opposed to what we've been seeing again, Egyptian stocks have actually been bucking the trend of that sell-off we've seen in the Gulf, and they're up this week for 3 days straight, and they're quite solid gains. We've had various factors. We've had single stock factors such as Telecom Egypt. They soared after some reports that QIA is looking to take a stake in Vodafone Egypt. But at the same time, yesterday, for example, we saw Fawry soar. We've seen e-finance also gain. So what could be happening here is kind of what we're seeing in Turkey. Local investors flocking to the market to pick up those cheaper shares, but at the same time to protect their savings against the probable devaluation of the pound and with the uncertainty over the rescue deal from the IMF.
Yeah, very tricky to hedge inflation. The gold market, for example, when priced in Egyptian pounds, it's already taken the future weakness into consideration. Farah, thank you for that. That's Farah al-Bahrawi there. So I have much more to come on the show. This is Bloomberg.
At Bloomberg, we believe in the power of ideas. That's why we launched Bloomberg New Economy Catalyst. It's a community of global leaders and innovators who are blazing new trails to transform business and government. This platform will help them share their ideas with the world and provide access to the resources they need to bring them to life. Bold thinking, breakthrough action. Bloomberg New Economy Catalyst.
Everything you need to get set for the start of U.S. trading. Bloomberg The Open with Jonathan Farrell. Drilling down on the numbers and preparing you as only Bloomberg can. Weekdays on Bloomberg. However you get your news.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
Bitcoin is continuing the struggle, currently languishing around the $18,000 level, but the CEO of Pantera Capital told Bloomberg that he thinks the cryptocurrency bottomed out in June and can easily decouple from wider markets on the way to its next all-time high.
I think blockchain can easily decouple from this kind of risk-on, risk-off mentality that people have had. And in a year's time, even if the main markets are struggling, bonds, real estate, equities, I can see crypto, marching to its own drummer and hitting all-time highs.
We have seen big leverage in terms of, the open interest in the perpetual swap contracts compared to the amount of Bitcoin out there. It looks like the market's preparing for a lift. What do you see in terms of the price?
Oh, I agree. We've been doing this for 10 years, and we've been through 3 big bear market cycles. And on average, they lasted 220 days, and that's basically what we just had. So I actually think we hit the lows in June that we'll see, and then we're on to the next bull market, and hey, it might be rocky and might take a while to get going, but I think that we're on to the next leg of a rally.
And where will that bring us to, Dan? What's your target for year end and then 5 years out?
Well, yeah, Bitcoin as a proxy for our industry has averaged 2.5x a year for 11 years. So that's always kind of my standard forecast, is that it'll probably keep going at that same growth rate for a while. But it is really important to remember Bitcoin's no longer everything. There was a time Bitcoin was 100% of the market, and then for a while, Bitcoin and Ethereum were essentially everything. Now there are many, many really important projects, and you've seen Bitcoin, rally a bit, but the real story is projects other than Bitcoin and Ethereum are rallying more.
Well, let's talk about Ethereum, because as Matt and I both mentioned already, we're getting closer and closer to the merge. It seems like there is a lot of hype, a lot of optimism. What is your read on the actual impact it will have?
Yeah, it's been our belief that as soon as they actually set a date for the merge, then Ethereum would outperform, and that's actually happened. And I think once we get through next week and it goes through, and God willing, it does work, it should explode. And so we've been, much more excited about Ethereum in the last month or two than Bitcoin. And you've seen Bitcoin share of the market has drifted down to 38%, and Ethereum's now worth a bit more than half the total market cap of Bitcoin.
Dan, love to get your take on stablecoins in light of recent big, bold move by Binance. They're going to automatically switch, I think, USDC, Pax Dollar, and True USD into their own BUSD stablecoin. Are we setting up for big competition among the exchanges in terms of their stablecoin products?
Oh, definitely. And even with governments, right? Central banks need to be into this, because obviously with antiquated systems like FedWire that takes 3 hours, stablecoins are a superior way to get money around the world. So in the future, finance will all use a stable coin or very similar product. So private enterprises like exchanges are going to offer them. Circle and Coinbase's USDC is a good one. And then the federal government and foreign governments are going to get into this.
Pantera Capital CEO there and co-CIO Dan Moorhead speaking with the team. The bond market is lit up like a Christmas tree in the United States of America. There's a slate of $30 to $40 billion of paper to come from the corporate side. But you're looking at explosive moves. 30-year paper, the highest since 2014. US's 5s and 10s moving by 17 and 16 basis points respectively. So you are seeing this gargantuan move higher. Barking on the tape, talking to the FT, saying hike and hold is the narrative. Let me show you the real rates, and this is where the real risk is. The surge, the fastest on record yesterday. 10-year tips up 15 basis points. We're looking at the fastest move in real rates on record.
Yeah, and from the bond markets, I take you to the dollar pain that's spreading from emerging to developed economies, and it is percolating through G10 FX. Euro dollar off by 0.1%. Dollar yen crossing 144. This is the worst annual drawdown since 1979. Also pain for cable. We're below 115 now. This is a level that we haven't seen since 1985. There's little prospect for near-term relief, with a survey by the Markets Live team suggesting that 2/3 of respondents believe that the dollar index is going to continue to gain. We'll leave you with a live shot from London. Coverage is right ahead. This is Bloomberg.
คนละครึ่งมาแล้วที่ฟู้ดแพนด้าส่งฟรีพร้อมรับเงินคืนสูงสุด800 บาทใครใช้คนละครึ่งสั่งฟู้ดแพนด้าเลย
At Bloomberg, we believe in the power of ideas. That's why we launched Bloomberg New Economy Catalyst. It's a community of global leaders and innovators who are blazing new trails to transform business and government. This platform will help them share their ideas with the world and provide access to the resources they need to bring them to life. Bold thinking, breakthrough action. Bloomberg New Economy Catalyst.